Hey everyone, and thanks for jumping back into the cryptoverse. This is your Thursday AMA. Let me just go ahead and quickly grab the link here, post it in the Telegram chat, and we will try to go through as many questions as we can. All right. I didn't actually post any questions or the link in the Telegram chat earlier. I'll try to just stick to mostly, because I normally don't even get to the YouTube comments when I do that. So this time we're just going to see them as they come in and just kind of see how that goes. But, as of right now, nothing's really changed, right? I mean, Bitcoin's still at 23K. So not a whole lot of new stuff to report on. But if you do have any questions, please feel free to ask them. Of course, the main developments right now are that things like the S&P are right around their 200-day moving average, right? So you can see the 200-day is at 39.39, and we're currently at 39.43. With the Nasdaq, the 200-day is at 11.901, and you can see the Nasdaq is at 11.895. So it's actually just below the 200-day SMA. So not exactly the biggest stroke of confidence, but we'll see if it can get back above it later today. But in general, I mean, the markets are again relatively boring, and this is one of those things where you kind of with the social risk, it ends up just being another statistic, right? So many people just throw in the towel, even though they say they never will, right? They eventually do, and it's what leads to just sort of the deterioration of social sentiment. And the argument is, well, if Bitcoin can go up 60% and people are still tuning out, it shows you that there's kind of a larger issue at hand. Why would TLT be a good investment? Well, the argument here is that so this is the 20-year Treasury bond ETF. So the whole idea is, if you're trying to figure out, does it make sense to buy TLT or does it not? The whole idea is, if you think that, say, long-term yields, so long-term treasuries, if you're in the camp that they're going to continue going higher, then that means that TLT is going lower. So I've said a lot recently that that TLT is likely to go down here in the short term, because I think long-term yields are going to go higher. But I am starting to think fading that move over the coming months is not going to be the worst idea. Okay, because I do think that the Fed's going to keep raising rates, but again, the Fed controls the short end of the curve. They don't control the long end of the curve, and the long end of the curve, is good at sort of sniffing out weakness in the economy. And so, if you're in the camp that long-term treasuries are sort of set to go down for a while, then that would mean that you would think that things like TLT or ZROZ, that those would generally be a good buy, because if the long-term treasuries are going up, then TLT, ZROZ, they're going to go down. But if long-term treasuries are going down, then TLT will be going up. And so that's kind of where we stand. And I've said many times that I think that TLT is going to come back in here, and you can see that it has come back in quite a bit. And right now it's actually just below 100, so it's right around 99 or so. Scaling, I mean, as I've said, even slowly scaling in over the next 6 months or so is likely going to work out relatively well. In the short term, though, you could still, you certainly could still see the long end of the curve continue to rise a little bit more. The 30-year is at 4.024. The 10 years at 4.067. Maybe keep in mind a potential double top outcome. I mean, some of these have already double topped or even gone higher. I mean, of course, the 6 month, the 1 year, the shorter end of the curve has already gone higher. The 2 year has gone higher. The 3 year is now approaching, its prior highs back in November. But when you get to the 5 and 10 year, I mean, if the 10 year were to get up here at 4.25, 4.5, or something like that, then you're really starting to it might be difficult not to full out fade that move and then to get a larger position in TLT. With that said, even if you want to get some today, I don't think it's the worst idea. But just know that in the short term, TLT is a good chance it could continue to slowly bleed here until, it will slowly bleed until treasuries have sort of hit their top, right? Whatever that's going to be. And so they've certainly been on a rally for quite a while. So I guess the question you have to ask yourself is well, how much more of this can the economy take before everyone just throws in the towel and says, all right, the Fed wins, And so it's sort of a timing thing. Everything is timing, right? It's a timing thing as to how much more can the economy take before people just no longer believe it. And once we get to that point, you would see TLT probably move up very quickly, sort of reverse course. So again, right now it's at 99. Even people getting in here, I think it's going to be a fine area with at least a 1 to 2 year time horizon. If it comes down even more, if it comes down to say the low 90s, I think that's a relatively attractive option. If it goes below that, if it goes to say like the 60s or the 70s, which is kind of hard to see, but it could happen. Back down to where it was back in like May of 2007, June of 2007. Like if it were to get down to the 80s, then I would likely get pretty aggressive on it, just as a portion of my portfolio. Obviously not the whole thing, but even if it's just a small percentage, just to say, the economy is getting too weak. We're likely going to see the long end of the yield curve start to go back the other way at some point, or to come back in. That means the TLT would go up. So that's what I'm looking for right now. You can see it came all the way down to 92 back in October, sort of bounced back up. You could argue that it was maybe retesting this trend line. It's got rejected off of it twice, and it's coming back in right now just below 99. And this region down here, I don't know how deep it's going to go, but that region I do think is a fairly attractive region long term. In the grand scheme of things, look at where we are. It's lower than where it has been since 2011. So even at these levels, it's not the worst idea. But again, as long as these long-term treasuries are moving higher, I wouldn't expect anything different, right? You could still easily see these bonds slowly bleed. What do you think the Fed funds rate will be on November? It's a good question. I've debated with myself a lot about this because markets are now saying there's going to be a cut again in December, but a couple weeks ago they were not saying there was going to be a cut. But the caveat is the cut is now a cut to a previous level that was considered the terminal rate. Now the market is saying the terminal rate's 5.75%, 5.75% by July. I will be honest, okay? This thing can change very, very quickly. The Fed is likely going to do a series of 25 basis point rate hikes. Now, I know there's a chance here they do 50 in March, and hey, it could happen. And I think right now my base case is still just going to stay 25 basis points. The reason why I might change that is if inflation in about a week or so, if it comes in very hot and the jobs numbers come in very hot again, I could see them maybe going with 50, but for now, my base case is just going to stay at 25 basis points. But the problem is that, let's say you get 25 basis points in March, and then you get 25 in May, and then in June, and then in July, you get 25 basis points. Getting the Fed funds rate up to 5.75%, we're really getting into some fairly restrictive territory at that point, and I'm not really that convinced the economy can handle it. And so while I know the market is saying no cuts, at least until December, there is a chance you do see some cuts this year. Now, there's also, of course, the chance that the cuts don't occur until, say, early 2024 as well. My guess is that the Fed funds rate by the end of the year is probably still, or by November, I think was the question, probably going to be above 5%. But I think in 2024 and 2025, we're going to see it back in the 3 to 4% range, is my guess. In the short term, though, I think the Fed has to keep raising rates because they have to get inflation back down. The problem is that they're essentially, they're essentially continuing to raise rates as the economy slows down and as people are getting laid off. And I think it's going to have a rippling effect. It's just taking some time to see it, but it doesn't mean it's not going to be felt. It just means that it's likely coming later. Again, the unemployment rate's a lagging indicator, and by the time there's a lot of anecdotes about how the economy is strong and restaurants are full, and while that's true, and I see it with my own eyes, I think there's a lot of truth to that. By the time you see those people hurting, the risk assets that we're interested in are probably going to be back off to the races because there's so much forward looking going on in the stock market. I mean, by the time someone feels it at your local restaurant that you might frequent, the market has already seen that, right? The market's already seen that well in advance. So just keep that in mind, right? Like, yes, there's certainly a lot of anecdotes that suggest we're not in a recession. And I would say I don't think we're in a recession right now. I just think there's a strong likelihood that one's going to occur either late this year or early next year. How do we dubiously speculate ETH revisiting bull market support on the monthly? I'm not really sure what you mean on the monthly, because the bull market support is it's the weekly, right? It's on the weekly, and it's currently sitting at 1421 to 1510. I suppose maybe what you're asking is, what if because I have this other one that I would use for gold. I suppose that maybe you're talking about this one on the monthly. So assuming that this is what you're talking about, then that area that Ethereum got rejected at in 2019 would be somewhere between 1860 to 2350 or so. So you can see that's where it rallied up to in 2019. That's where it rallied up to, and then it got rejected quite handily, and of course came back down. You can see that the move down here from that level was about 80%, but from this level it was only about 63% or so. So one of the reasons I think we had such a strong bounce over here is because of just how quick the capitulation was in December, right? I mean, we came down very, very quickly, and then the market just sort of corrected back up to the upside. This time, we haven't really seen the same level of drop, right? It was just sort of a slow bleed. And so you have to keep that in mind, but maybe this is what you're asking. I'm not 100% sure. How many projects are too many to have in a portfolio during an accumulation phase? I hear overly diversifying can be detrimental to wealth creation. Well, in the stock market, being diversified across various assets with, say, like index funds, I think is quite useful. In crypto, what I normally say is I would say between 5 and 10 is where you want to be. Probably closer to 5 than 10, if I'm being honest. Bitcoin and ETH would I think need to be, my opinion, not financial advice, but I think Bitcoin and ETH would need to be in that portfolio. And then beyond that, you might speculate on one or two other layer ones. You might speculate on maybe a couple of layer twos. Maybe you speculate on one or two things in the gaming sector, maybe in the NFT sector. But I don't really think you need like 30 different projects, because the truth is a lot of them just sort of follow each other, right? If you look at the correlation coefficients, so many of them, they follow each other, right? So like having exposure to all of them isn't really going to do you much of any good, especially during phases of the market like we're in right now, where I mean, it seems like everything's more or less tracking one another. There are some projects that have done okay, but for the most part, you've really seen that a lot of them sort of are tracking each other. And if you look at, say, like crypto and stocks and metals, right? I mean, you can see there's even a large correlation between total market cap, Bitcoin, and Ethereum. So right now, honestly, I would say 3 to 5, but in a bull market, I would probably say 5 to 10. And by 3 to 5, I just mean for people that want to expand beyond Bitcoin, because for me, it's just basically Bitcoin right now. I mean, I do have some ETH. Like technically speaking, I do have some ETH, and technically speaking, I do have some altcoins, but I haven't been buying any altcoins in like 14, 15 months. Mainly because I think Bitcoin is a better play right now. So I'll just stick to Bitcoin. So I would say right now maybe between 1 to 3, and maybe 1 to 3 into right now, and then maybe 3 to 5 by the end of this year, and then by next year you could say 5 to 10 is kind of what I would suggest. We'll be doing more in-depth equity videos, stock valuation analysis models. So we're trying to add more equity stuff to the website. So hopefully you're sort of seeing that come through. So the idea is for us to talk a little bit more about equities. One question that I keep meaning to pose to you guys, and I'm curious as to what you think. I'm not making any promises or anything like that, but there's a lot of stuff on the website. I mean, an astronomical amount of stuff. If you think about it, we've got stuff for like hundreds and hundreds of different cryptos, on-chain stuff for hundreds of cryptos, and equities and macro stuff, and like it's a lot. It's a lot for one person to really go through everything and make content about it. So there's always this idea that, and again, I'm not promising, but there's always this idea that we could have other people create more content around the website besides just me, just so that there's more brain power going into sort of dissecting what's going on in various asset classes, and more intricate details into various stocks and that sort of stuff. So I'm curious as to what you guys think about something like that, or would you prefer it to just be me forever and only me, or would you prefer it to be me and then also have some other people that might come in and provide insight? Because again, the website I think is a great tool, and there's all sorts of stuff that you could really talk about. Have you contributed to your Roth this year? No, I have not yet. Would you speculate that in more likely the bottom's not in? Then I think the problem with saying that the bottom is in is that it could be in, but the problem is that it completely discounts the idea of a recession. And I mean, this is one of those things where if we don't get a recession, the bulls will just say, or the people that call the bottom are just going to, brag, but just like they would have back in June, right? A lot of people called the bottom in June. If they had been right, they would have been bragging constantly about it. They weren't right. So they went into their caves for a few months, and then they come back out calling the bottom again. So I would say the main risk with putting a lot of weight behind the bottom is essentially you're saying that we will not have a recession. And I think there's a chance we do. And so I wouldn't want to get too much into the camp of saying that it's definitively in, when if we were to say that, it's basically just completely discounting all the effects that the Fed has done. And again, I mean, markets can rally even when we do have strict monetary policy, as we've seen, but it doesn't mean that there's not going to be another scare later on this year. I think you could see another scare sometime around the Q3 to Q4 mark, when people really start to test their resolve, just before we get into the next halving cycle, and probably switch back to QE. Can the ITC team build hard-coded models where we just add in financials and it does the math by itself with different stress test cases? Maybe. See, I've thought about doing some stuff like this, but we haven't gotten to that point yet. Right now, we're just sort of trying to build out the website in terms of covering all the different asset classes, or at least more than we were. But I mean, there's certainly possibilities that we can expand it. Is 40 to 50K by the halving still a possibility? I don't know that 50K by the halving was ever a possibility. I don't ever remember saying 50K by next halving. I think 30K. Yeah, like a 30K is a possibility, right? Like it could go to 30K. It could go back below 15K and still go to 30K by the next halving, right? Like it could do that. It is a possibility. So yeah, it's a possibility. When was the last time you bought Bitcoin? I want to say, I think the last time I bought some was early January. Yeah, I think it was probably around early January or so. Um, I can't remember if I bought any since then or not, but I don't think I have. Can we add the Bitcoin plus Ethereum dominance on the website? We can add it. You can also do it yourself. I'm not saying that you should do it yourself, but if you really wanted to see some of that stuff, like, and you feel like you can't see it, it is possible if you go to the workbench. Okay, so like here's a, let me find it. Top 5 dominance. So like this one is Bitcoin, Ethereum, XRP, ADA, and BNB, and it's adding all the dominance levels together. But if you just wanted to say Bitcoin and Ethereum dominance, then you can just do say M1 plus M2, and then evaluate that, and there you would get the the Bitcoin dominance plus the Ethereum dominance, right? So like there's different ways that you can accomplish what you want. I mean, the workbench gives you a lot of functionality that I don't really think a lot of people are using it right now because the markets are just boring. But there's a lot that you can do on the workbench if you wanted to. What percent of your portfolio is in stocks and index funds? I Well, it's not as much as it used to be back in like 2019 and 2020 because as I said last year, like cash is king. So, um, it's I think I'm still around. I think it's around 60/40. So like at least when you compare it to my cash position. So like cash 60%, index funds and of that nature 40% or so. It actually might be a little bit less with the dip recently because the S&P actually just came down quite a bit over the last several weeks. So yeah, I mean, I do think there's going to be definitely phases this year where cash is king. And so yeah, it's about 60/40 when comparing it to my cash position. 60% cash, 40% equities or so. Um, Thought about emojis being considered as financial advice. I don't really know what to think about that. I mean, I think it's just ridiculous. Um, so it sounds like some people are interested in having other people on. They asked, "Is the collaboration series ended?" No, I mean, like, I'm still gonna do collaborations. It's just that I feel like I get into these phases where I do a lot and then I just kind of don't do them for a while, and then I do a lot and then I don't do them. And one of the reasons I do a lot sometimes is just to get a different perspective on the market, especially if if I want some insight into seeing things a certain way, then I sometimes I'll bring someone on just to give me some insight into what are they seeing in the market. And I think that's a good thing, right? Like you should value other people's opinions because maybe they show you something that you wouldn't have otherwise seen. But yeah, I haven't really had anyone on recently. I will. It's not that I won't ever. We will have more people on the public channels. But I was more so talking about having some more people that sort of are dedicated to the website. Um, okay, so someone says if they'd have to be up to speed with my strategies. Well, I think the one caveat to that is like it could be useful to have someone that provides a balance to my strategies, right? Like is there value in having someone that dives into the equity verse on a daily basis in and dissects earnings reports from top to bottom. Like, is that stuff valuable? Or is it valuable to have someone that is more focused on shorter term trades than I am? So I don't know. Like maybe that stuff would be valuable to have. And it's hard because like I wouldn't necessarily endorse everything that they would say. I mean, I say I wouldn't agree with everything, but I'm just trying to figure out, like, is it worthwhile to have something like that, or is it not? Like, would people just prefer to not have that because maybe it would send mixed signals and they don't know what to think. I don't know. You mentioned there's a risk of not making a higher high for Bitcoin if we make a lower low this year. How low would that lower low need to be in your opinion? So I do think that Bitcoin will make a higher high. It eventually, no matter how let me clarify. No matter how low we go, I still do think Bitcoin will eventually make a higher high. The question is does it make a higher high next cycle? If Bitcoin were to go and put in a new low, then, which is a possibility, right? There's a strong possibility that occurs with a recession. I don't think it's worthwhile to just sort of discount it just because, just for the sake of discounting it. Like, there is a risk of it happening. It's financial market. Anything can happen, just like it's possible that the bottom is in. But I mean, if we were to go to like 13K, I still think we could see new highs. If we were to go below 10K by the end of this year, then I think you'd have to really start to question us seeing new highs in this bull market, like in the next bull market, right? So, but here's the thing, right? Like, you can still make a lot of money even if we don't see new highs, right? I mean, think about the altcoin market. I mean, the altcoin market has gotten wrecked. But, even if some of the altcoins that you get, they don't make new highs. I mean, even if they go up 5 or 10x off the lows, like, that's still a decent return, or even more, right? It's still a decent return. So that's why part of the hard part is just not getting into the altcoin market, during when they're in downtrends, and just sort of waiting, because otherwise you get stuck just trying to wait till some all-time high for it to mean anything. But that's not actually true, right? Like, you can still make money even if something doesn't go to a new all-time high. Any thoughts on Tesla's move today? As I said yesterday, my general speculation was that it was a sell the news event, the investor day. And, we always run the risk here of getting ahead of ourselves and claiming victory on these calls. But so far, it seems like that observation has panned out. I mean, you can see that Tesla is down 6 to 7%. I think, I listened to a large part of it, and a lot of it seemed kind of vague. Like, hey, we have this grand vision, but we're not going to go into all the nitty-gritty details of it. I am bullish on Tesla long term, but I think this year is going to be a tough year for Tesla. And I think by, mid 2024, 2025, I think you'll really start to see it turn around and grow a lot. But in the short term, yeah, I think it has. I think the risk to the downside far outweighs, sort of the upside potential at this phase. I could be wrong, right? But I mean, again, I'll remind you, like, I've been bearish on this thing for what, like 15 months now or so. I think it's just another bear market rally, right? We've had plenty of them, and I just think this is one more bear market rally. And I mean, you could always come back up and touch this trend line again, like we did over here. We came up to these levels a few times, like we did here as well. So, even if it does that, it doesn't mean that it's not going to go back down. Like, even if Tesla were to rally back up and hit that 220 to 230 mark, it doesn't mean it's not just going to turn right back around and come back down to the low 100s. If we have ideas for the website, is there a place we can send those to? Yeah, you could send them to solutions@intothecryptoverse.com is what I would suggest. What do you think will happen by the time next cycle the Fed pivoted, but macro is still really bad? Do you think the cycle will lengthen and just delay the peak? I'm not really going to get into the lengthening cycle stuff again. I mean, I'm just going to have to go with when the rally occurs. That's when you turn bearish. I mean, I was bearish back in March and April for good reason. I flipped bullish in the summer, and then it took me until early Q1 to flip back bearish. So I think next time, if we go to the 0.9 to 1 risk band like we did, I will just assume no highs are coming. Not, and again, that would have been wrong last cycle. Like, if I just assumed no highs would have come after the first trip to the 60 to 70K region, I would have been wrong. But I think that would have been a case where it would have been okay being wrong, right? Like, yeah, so what if you technically put in a new all-time high? there still was plenty of reasons to be bearish. So I would say, first of all, you say what happens if the macro is still really bad after the Fed pivots, but I mean, to some degree, the Fed pivot is a large part of the reason why the macro looks bad is because they're raising interest rates faster than they ever really have, right? It's because the money supply is shrinking. There's a lot of issues going on right now, and it's going to take a change in monetary policy to change some of those issues. So once the Fed pivots, it sort of takes care of some of the macro issues. Now, there's still going to be other issues as well, right? There's going to be geopolitical risk. There's always going to be something. But it doesn't mean that you should sit on the sidelines forever, because if you do that, then, as I say, right, like scared money don't make money. So yeah, I mean, there's sort of a fine line there between like weighing a risk, trying to figure out, okay, well, does it make sense to take the plunge? And, an example right now for me is it does not make sense to take the plunge into the altcoin market, because I think the downside risk is still far outweighing the upside potential, especially on their Bitcoin pairs. And so, with that in mind, I don't think the altcoin market is worth the risk right now. But you could argue that other things could be worth the risk, right? Like things like TLT could be worth the risk, even though I think there's a good chance you'll see a little bit further downside here. And if we come back into these levels down here, then I will probably start to get pretty aggressive with it, especially if we put in new lows. But you always have to figure out, there's always going to be a risk, right? There's never going to be like, hey, this is the time to buy, and you're just 100% sure about it. Like, when you buy, you're always going to be somewhat nervous about it not working out in your favor. But again, that's just a risk you have to be willing to take at some point. Brandon says he works in the car business, and we're currently seeing a pretty significant pump in used car prices at the moment. Any idea how much weight used cars have on inflation? Well, see, here's the thing. We talked about this the other day. I put up a chart in the Telegram chat talking about used car prices, and we're like, look, guys, this is a left tail risk that could cause inflation to reaccelerate. I don't know the weight exactly, but this is a risk, and I think the risk here, and you can kind of see it playing out, right? Like inflation temporarily goes back up, which we talked about for how long now? Half a year. Like, inflation temporarily reaccelerates. It causes the Fed to sort of shift a lot higher, to maybe even getting close to 6%, and it pushes them too far, because you could argue that within 6 months, the temporary reacceleration of inflation might have taken care of itself as we finally feel the effects of the 75 basis point rate hikes in a more material way. But the issue is that the Fed goes too far because of this temporary reacceleration of inflation. And that's kind of where I'm sitting. I do think inflation is accelerating, at least temporarily. I could see it lasting for a few months, causing the Fed to really go beyond where they likely need to, and sending us into a recession sometime later this year or early next year. Will the charts ever be viewable on the app? Yeah, they will be eventually. I'm going to go over and check the Telegram questions. Yeah, I still haven't refit the log regression stuff yet. Where does the... Sorry, I'm trying to see. Anything you use to track your entire portfolio, or just Excel? I don't use Excel. I don't really like to... I mean, I have an accountant that handles my stuff. Where does the data for the CME target rate probabilities come from? Well, I mean, you have investors that are basically placing bets on what they think is going to happen. So, I mean, again, you could argue that this side of the market is a very sophisticated side of the market where people are betting on probabilities of these things. So, I think that you have to consider that there's always going to be sort of people taking the over and the under. And right now, these investors, there's people that are saying, hey, 30% chance that they do 50 basis points, so they like those odds, they take that bet. Again, normally the market's right on this, so I would say 25 basis points is going to be the most likely scenario. But you never know. How accurate is the dot risk indicator? So a lot of the altcoins, I just wouldn't even worry about right now, right? Like I would say just use the total altcoin risk metric. In bear markets, when the altcoin has never experienced a bear market, it can just constantly redefine. And that's why it can redefine what zero risk is. And that's why I say like, that's why some of these confidence levels are really low on altcoins, because they can be constantly redefined as to what the lower risk is. So just keep that in mind. In general, I would say keep that in mind. That's sort of like the general rule of thumb, is that you don't have enough data to really know. But if you want to go take a look at least some of the altcoins that include, say, things like diminishing returns and then that sort of stuff, you can go to the website. So I would put more confidence in these ones that are on this page than on the other than on this page. I'd put more confidence into those ones I just showed you. What do I think the floor is for Google? So I mentioned yesterday that that Google. So we talked about so Netflix had a 77% correction. It has a sizable rally. I did not put out a signal on that one, frankly, because I wasn't really that concerned about Netflix at the time, and I feel like I had bigger things to worry about with the cryptoverse. We saw Meta do the same thing though, and when Meta did the same thing, we came in and said, all right, pretty reasonable buy area. And then this I said was a pretty reasonable area to sort of scale out. Not financial advice, right? Because, you know, a 2x move, you're likely going to see this move get faded to the downside, at least in the short term, right? So then yesterday we talked about Google, and I said I think Google might actually be the next one up here. So if you're if you're interested in obtaining positions in some of these tech stocks that get sold off like crazy, I'm watching Google quite closely here because, you know, we saw Meta go down 77%, we saw Netflix go down 77%. So far, Google's only gone down 45%. But you can also see it's kind of climbing here. If this breaks, we could see a very quick move to the downside. And I would say that there could be some elements of people sort of getting fearful about, you know, chat, the artificial intelligence stuff sort of taking over and Google no longer making money. I would probably fade that. I mean, I think if you're a company as large as Google, you're going to figure out a way to sort of make money on this, and you're probably going to have your own competition. So I would say that, you know, where's the level to look at? I suppose coming back down to the bottom of this trend line could be the first level. So in the 60 to 70 range, the 60 to 70 range could be an interesting level. That'd be about 57% down. If it went 77% down like Meta or Netflix, I mean, you're talking all the way down to $30 to $40. I have a hard time seeing Google going that low, honestly. Like, I don't think Google's going to go that low. So I would probably say like below 70, like anything below 60 to 70 range is going to be pretty good value on Google. Long term, there's probably good value at 90, right? I mean, 5 years from now, 90 is probably relatively good value. But if you see Google come back in here and kind of come back down to this lower part of the range down here, I think that would be some fairly good value, akin to Meta and Netflix, even though it won't have been down 77%. Now, if it does drop 77% like Meta and Netflix, I think that would be insane value, probably better value than what Meta was at the time. Remember, we've added some stuff to the equity side of things, right? So we've added the price. One of the things sorry, let me find under the fundamentals. So we have the historical and forward-looking earnings per share. We also have historical and forward-looking price to earnings ratio. So for Google, you can see that the forward is still looking pretty bleak right now. So it might be just a bit too soon to really come in heavily on a Google play. But I think late this year, like I think maybe even as soon as next month, right, depending on how bad things get or how quickly things move down. But I think you're going to have plenty of opportunities this year to establish position on tech stocks. Remember, tech stocks tend to not do that well when you see a Fed this aggressive as they have been. So I would just keep that in mind. Any chance of a cheaper ITC lifetime promotion? No, it's not. It only ever goes higher, and the reason it only ever goes higher is to honor those who bought it in the past, right? Like I'm not gonna offer a cheaper price to people that buy it later on than people who got it in the past when I think it'd be doing somewhat of a disservice to those people. So unfortunately, no. Someone says they have a position in Litecoin. They're curious as to what pre-halving narrative plays out. So I do think Litecoin will fade before it's halving, is my speculation. So normally it fades. I would say by June is likely when it will really start to fade. It could fade before then if the whole market goes down. Like if Bitcoin kicks the bucket, Litecoin could come back in. So you could always see like a scenario where Litecoin comes back in and then maybe pops back up into its halving and then comes back down. But I would say like I wouldn't be that interested in Litecoin. I mean, I'm never really that interested in Litecoin, right? But I've talked about that people want to take the trade that it's always there to take. Normally, you see Litecoin fade, 4 to 8 weeks before it's halving relative to the rest of the market. So I would not be getting to, and I mean, if you got into Litecoin at 40, 50, 60, $70, I mean, you might even skim some off here, to be completely honest. I mean, actually, it was around these levels back in 2019 that the Litecoin saw a move back down to the $60 to $70 range. So that's always a possibility as well. But certainly I would look to be fading it by early summer if you haven't already. And you can see that when it gets faded, it can come right back down to where it was. Like it could easily come back down to $40 later on this year, early next year. So I know it might sound crazy, but we've seen it happen many times, at least twice with Litecoin, where it rallies into the halving, and then about 1 to 2 months before the halving, it fades it, and then it just keeps going down after that. And if you time it up with a potential recession in the second half of the year, I think Litecoin's going to get hit pretty hard. In the short term, it's likely going to it's going to keep showing relative strength more than likely relative to the rest of the altcoin market. But the market risk still is there. I mean, if Bitcoin goes down, Litecoin's going to go down with it more than likely. For the Dotcom crash analogy, what should be made of the fact that the S&P divided by M1 made its highest high at the Dotcom crash, whereas Bitcoin did not? So there's actually a nuance here that you might be unaware of, and it's something that I have to remind myself of too. So it's reasonable that you might have missed it if this will actually load for me. So you're arguing that, let me just pull this up. So I've actually been following lumber a lot recently too. But so the NASDAQ divided by M1. So your argument is essentially, look, like, why do we put so much weight into this? Like, if you look at the NASDAQ, look at and you divide it by M1, look at what it did, right? Like, look how high it went, and then how much it crashed. But it was much higher than anything that had come before it. And now you're saying, well, with Bitcoin, Bitcoin didn't really do that. Yeah, but also you should know that the definition of M1 changed right here, right? Like you can see that Bitcoin was heading higher when divided by M1, and then it just sort of dropped here. And you may say, well, is that because of what happened in March of 2020? No, this was in May, right? This was in May. So if you were to line this up, and again, it's not going to be a perfect, you can't really do this. But you could argue that it was like that it did go a lot higher than you might have otherwise believed, because the actual definition of M1 changed. So yeah. All right, guys, I got to get going. Hopefully this has been useful. I think I got through most of the questions, so I will see you guys again next Thursday for more questions. And of course, we'll see you in the Telegram chat either way. Yeah, I think that'll wrap it up.